This one shows indecision. And this one shows potential bullishness because the sellers have been repelled. This is a gravestone doji, which is potentially bearish. Buyers came in and could not hang on. There is also a long-legged doji, which just shows that it was a much more wild day or hour or whatever, where we had a bigger range. There is the northern doji, so these are just candlesticks. A northern doji would be up here. And it's not technically a northern doji until you roll over like this. You have to have candle, doji, candle. That would be a bearish sign. A southern doji would be the exact opposite. A gapping doji is when you have candlesticks and then you get a big gap in a doji. There are also doji stars, which shows several in a row, showing in an uptrend, for example, that you're running out of momentum. And that's the whole point. You're just running out of momentum. Now, some of them do tend to lean in one direction or another. But for the most part, the main takeaway is that during that hour, that day, that 4-hour candlestick, whatever, momentum had stopped. Now, the problem with dojis that you will run into is you don't necessarily want to trade them by themselves, because some people will trade them. You know, you get a doji, and as soon as price breaks above it, well, it's time to buy, or below it, time to sell. That typically is the problem with the doji is by themselves, they aren't necessarily reliable as a signal. However, you can do little tricks with them, and they can tell you, give you a little bit of a heads up. Think of it more or less as a warning signal. That's probably the best way to think about it. So you can see that we formed a doji here, a doji there, kind of a dragonfly doji there. It's actually something called a hammer, which we'll get into in another couple of videos. But you can see that there was support there and resistance there. We couldn't get above or below. And that's denoted by the fact that we had rallied. We had 3 decent candlesticks in a row and just kind of went nowhere. And it shows all of the indecision. Well, once you finally get a decisive candlestick, that's your sell signal. Indecision, 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 then suddenly they make a decision. So, if you remember, I mentioned the dragonfly doji, which shows that buyers push the market back up. Well, what happens when we break down below the bottom of that doji? That shows that the buyers have lost strength, right? So if you close below there, that could be a sell signal. The thing is, like I said, you don't use it by itself. So in this scenario, you can see that this was the one I was pointing out. We broke below it. Right here, you would expect a certain amount of support. We actually sliced through it, but that would be part of what might keep you out of shorting that. You know, remember, support and resistance, very important. And as a matter of fact, that's the most important thing, because almost all systems are built upon it. So, like anything else, the higher the time frame, the more important it's going to be. That's because it takes more work to produce those dojis or candlesticks. So, the first thing that I would ask you is, on this daily chart of Ethereum, you can see that, you know, that in the daily candlestick isn't done forming, but let's just, for the sake of argument, suggest that this was the candlestick you end up with. there's two different ways to look at this, and there's two different outcomes. We could break down below, or we could break higher. Now, here's the thing. If we break higher, what does this doji mean? This doji means that we had a couple of days of really strong bullish pressure in Ethereum. We took a minute to kind of perhaps struggle with the idea of 1700, catch our breath, and then we broke higher, continuing the trend. That's a very bullish sign. You want to be a buyer of Ethereum. But what happens if we pull back? Well, unfortunately, most retail traders try to pick tops and bottoms. So what will happen is they will start shorting this. And it could work. Don't get me wrong. I'm not saying it can't. But there's a much better chance to look for this big, large, round number, right around $1,500, to potentially offer support on a pullback. This pullback would be perfectly healthy because in any trend you get them, you have to have more people coming in. So with the 20-day EMA reaching towards the $1,500 level, I would expect somewhere in this general vicinity that there should be a bounce. And you can use another candlestick or just the fact that the market bounced as a reason to get involved. The 20-day EMA, you can see the market is respecting that quite nicely. So that is something that you definitely want to keep in mind. You can see that we are approaching the oversold condition, for what it's worth in the RSI. But the candlestick alone will tell you that. So, Litecoin is like all other crypto at the moment, bullish as I record this. This is a perfect example of the candlestick that I just showed you. You can see that we rallied, formed this almost long-legged doji. It shows that there was a little bit more, range for the day, and we broke down below it. Now, again, some people will sell that right away. Typically, it's going to be better not to fight the overall trend. And this was an impulsive move. You can see that's where we took off from, and that's where we dropped to. So this doji suggested that we could fall, or depending on how you choose to trade, it could tell you, hey, you're about to get a bargain if you are willing to wait for a better price. There is so much more money to be made hanging on to a trend than there is trying to catch each top and bottom. That's actually, I think, where a lot of retail traders run into serious issues. They believe that trading more equals more profits, and that's not necessarily true. And in fact, over time, you will find that actually the less you trade, the better off you'll do, because you tend to pick better trades. And once it starts working, you really let it go. So here's an interesting setup of a bunch of dojis. Notice we have 1, 2, 3, 4, 5 in a row. So a lot of times what I will do is I will draw a line at the top and a line at the bottom and look at it as a signal if we break out. If you remember the rectangles, that's really all I'm doing here. You could extrapolate this down to a lower time frame. Like these candlesticks here. That's what that would look like on a line chart on maybe the 1 hour time frame. So really that's all you're doing. You can see there's a lot of sellers here. You can see there's a lot of buyers here. Somebody's going to win. Once they do, then you can take off. This might be a little bit more of a reversal signal than anything like this would be. And why is that? Well, that's because there's a lot more fighting going on. There's a better chance that if it does break down, there's a little bit of exhaustion. This looks a lot like a gravestone doji, but it actually has a little bit of a line underneath it. We could be splitting hairs here, but that could also be what is known as a shooting star. We will talk about that in a couple of videos. Excellent signal most of the time. So the thing about doji candlesticks is again, it really comes down to where it's placed. So look at this one. This was the pullback that I had just talked about. Well, look at this one here. We pulled back again. It does make sense that we would drift lower there because of the previous resistance. Again, though, it's not as if we were at a downtrend, so you don't necessarily want to sell it, but it is viable to think that it could happen. So as I put this Bollinger Band indicator on, notice how we pierced yet again after all of this and formed this doji. So what does that tell you? That tells you that the market was running out of steam. It got overbought. This is perfect natural behavior. The dojis, of course, can work in both directions. As you can see here, that was negative. Again, though, that's more or less a shooting star. The fact that that's splitting hairs, some people would call this a shooting star, some people would call it a doji because it was unchanged. Really, at the end of the day, it's going to tell you the same thing. The biggest thing about candlesticks that you need to keep in mind is that each one is trying to tell you a story. Some are like a chapter in a book. Some chapters are more important than others. And you have to take it in the context of the entire story. So not all dojis are going to matter. They can, but they can also just be, the time of day. So, for example, if you find that a market that you trade tends to be more active in Asia than it does in North America, well, if you form dojis on a 1-hour chart during U.S. trading time, I should say, then that may not mean much either, other than the fact that, a lot of the market participants weren't actually working at that moment. So you will find a lot of times they end up being at Fibonacci retracement. This is the 50% Fibonacci ratio. Again, this is like that one that I pointed out earlier that could be called a shooting star. This could be called a hammer or a doji. Really, both are technically true. But notice how we pulled back half of the move and then rallied. Again, with the hammer, we'll go into more depth later on. So I would say that as far as dojis are concerned, the ones that do tend to work out more importantly, the ones that are a little bit more clear, I guess, are the when you get multiple in a row, and then you can draw like a rectangle and use it basically as a rectangle. And again, sometimes they just give you a heads up that, hey, you may get a pullback. Maybe you want to add to it a position, or you want to tighten your stop loss. They're quite often used more or less for trade management. So go through your charts, and it really doesn't matter the market, but go through multiple charts and take a look and identify dojis and see what it was trying to tell you in the bigger context of the entire story. Dojis in a major uptrend, that might mean a pullback. Dojis in a major downtrend, that might mean hesitation or a pullback. It can mean a turnaround, but typically you need to pay attention to support and resistance. After that, see if you clear it to the downside in this case, then okay, fine. But they are very subtle. It takes a little bit of subtle reading into the story to truly grasp what the doji is trying to tell you. It's not one of your more clear-cut patterns, especially when you have something like this. That's not really telling you anything other than the market isn't moving. So always take it in context. Take it with your indicators and your support and resistance.